Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex trading room for July 12th of 2020. We are going to go through our standard agenda. We'll take a look at the results of the prior week, our currency strength meter, any fundamental announcements we've got scheduled for the week, a look at the daily charts, the major pairs, any setups we see in progress, and a few words in conclusion. We'll start off with the ledgers, the long-term account on your screen. No change. We have the same trade open we've had since the middle of June. So we're going on almost a month of that trade being open, which again, it's the long-term account. So no surprises there. So no changes at all. The percentage of gain or growth, 14.74, slightly down from 14.90 something, and that is just a result of the ongoing swap cost. It does cost to keep a trade open week after week. It's a minimal cost, but a cost nonetheless. So we will see the balance eroding itself on that account until we close out that trade. So again, nothing out of the ordinary. The intermediate term account is down another couple of percentage points, again on a flat, bumpy, bouncy market. We got two trades closed out against a euro dollar and an Aussie dollar, and they've been going in both directions. So it's just very, very difficult to trade in this kind of market when they're not moving to any significant degree. They're just zigzagging up and down within a tight range. So it just doesn't work out for profitability. Of course, these sideways markets don't last forever, so we'll be out of it eventually. And the short-term account is down about 4%. We had a few winners, even with the sideways market, but not enough to make the difference. So 3 out of 6 were winners, and the losers had the upper hand. Again, not a devastating. We'll continue to see this happening, of course, until the market does wake up out of its current sluggish state. So we'll hang on. We're never going to be losing too much, and we will come back. Notes and opportunities for improvement. Again, flat market, flat results, pending orders in place for when the market wakes up. We are undergoing a surge of COVID infections and death rates in most places that have reopened. In fact, Florida posted the highest number. I forget if it was infections or deaths or something since the reopening. So we are in a second wave. Many of the states here in the U.S. that had reopened are now closing up again. Masks are being mandated, mandatory to wear a mask in some states now. You're going from green back to red, and well, it's just chaos in most places. It doesn't look like anybody has a handle on what's going on. We have the government trying to appear as if they know what they're doing and mandating this and that. Not even the federal government. Each state is making its own decisions. And of course, you have a populace that for some reason got convinced they should be immortal, or that nothing should ever affect them. And of course, they're insisting that's some sort of solution. We found this doesn't work. Even this vaccine idea that we're going to have a vaccine in 6 months, I have no idea where they're getting that. I mean, we have viruses like AIDS, HIV, for which we've been looking for a vaccine for the better part of my lifetime and haven't found one yet. So thinking that a vaccine is going to magically appear and our fat out of the fire is a little bit naive. But again, that is what is going on out there. The rioting and protests that we have been seeing as a result of the killing of George Floyd at the hands of the police back on Memorial Day weekend seem to be slowing down. It's still ongoing. We had a major football team today decide to change its name. They're supposed to announce it tomorrow, Monday. What the new name is. So again, it's just people are going crazy. Oil does continue to hold on to gains. It's around the $40 mark, and silver and gold are holding steady. Our live event is rescheduled. New date September 30th through October 2nd in Wilkes-Barre. The details are on the website. I will be having this seminar come hell or high water. I don't care if I'm the only one in the room. I'm not going to be moving it this time. Even if the venue decides not to allow me to host it, I have an alternate venue, which is 100% under my control because I own it. So if push comes to shove, it'll still be here in Pennsylvania, just in a different town, and I have enough room to host a fair number of people. It's a rather big building I own. So if that is the case, I'll do it on my own. Of course, I can't guarantee that everybody will be able to travel and this, that, and the other. You do have to play it by ear, but I will be having the event, and you know, if you can come, I'll figure out a way to live stream it so you can still attend. But this is happening because I'm going to be recording it regardless. I do want to do a bit of an update to a few of my other programs, and I will be stealing material from this updated and well, fantastic seminar that we're going to be doing. So that's the news for this time around. Our relative strength meter, again, the new format, I'm not too thrilled with it, but it is what it is. The old one got deleted by Owanda, which I was getting it. But we can see on the monthly column, which is the one at the far right, we can see that a major mover for the month has been silver, all the way at the bottom with 2.99%. Gold at the bottom with 1.05 also didn't fare too poorly. So we've got rising prices yet again on silver and gold for the month. Other winners have been the pound dollar and the Kiwi dollar were up almost 2%. And then we have a few losers with the Aussie, New Zealand, the CAD JPO. We don't trade either one of them. Maybe we should start trading. And Euro Pound also lost about 1%. The only one there I think we're in is Euro Pound. We're shorting it, so we're moving in that direction. We'll see where it takes us. So that is your currency strength meter for the month. For the week, no big movers other than silver. Silver rose almost 4% for the week. That's telling you that the market is decidedly skeptical on anything that does not have real value. So silver and gold are reaping the benefits of that skepticism to the tune of about 4% for silver and 1.5% just on the week for gold. Nothing else major happened, and none of the others breached. Some of them didn't even come close to a 1% move. So again, that tells you how flat the market is. The exception being the pound dollar. It did 1.29%. That's the only one of the currencies that breached 1% for the week. Fundamental announcements coming up. A busy calendar. I apologize if you can't see it very clearly. But we have 5 events that we will be trading. Tuesday, tomorrow, 2 days from now, Tuesday, I thought this was Monday into Tuesday night, but no, it's Tuesday late night. Tuesday at 11 p.m., the Bank of Japan interest rate decision. Then on Wednesday, we have the Bank of Canada interest rate decision at 10 a.m. and the employment change out of Australia that same evening. On Thursday, we have the ILO, and this is early morning, so this is Wednesday into Thursday morning. We have the ILO unemployment numbers out of the UK at 2 a.m. my time, Eastern time. And we have the European Central Bank's interest rate decision at 7:45 a.m. I may decide not to trade the ECB. We'll see. It depends on how I'm feeling. It's very early morning for me. I'm not a morning person by any stretch of the imagination. But we'll see after we do the ILO. I'll make an executive decision whether I want to get up in 4 hours and 5 hours. Actually, 5 hours is enough. I'll probably do it. So, but anyway, stay tuned. But those are the 5 events on the calendar as we stand right now. Commodities, starting with the charts now. So commodities, oil, as you can see, has flattened out at $40. It's still looking like a bullish movement, but it seems to be losing steam. Of course, it came up from negative numbers, so of course it was going to recover. I told all of you it was going to recover to some degree, and I did buy oil like there was no tomorrow back in late March, April, whenever that was. So I did quite well with my oil futures, liquidated them actually last week. Not too sure whether this is going to drop again or keep going up, but it does look like the bigger movement is done. Still, $40 is, all things considered, a respectable price for oil right now. So that's what oil is. Moving on to the currencies, the euro dollar was very undecided for the week. It went in all directions, ultimately didn't move much. So we didn't have anything we could latch onto for the euro dollar. We're still waiting for it to break out in either direction. Pound dollar was a little bit better, and indeed, as we saw on the weekly movements, it crested 1%. So it did go up 1.29% for the week, almost but not quite getting to that outer trend line. We're also waiting for a breakout, but you cannot call this one sideways, at least. Well, you can call it sideways, but you need to look a little bit further out to see the sideways pattern. And in the recent time frames, it dropped precipitously and then recovered almost just as quickly. So we're waiting to see if ultimately it goes up or down, and we'll be obviously paying close attention to it. USD/JPY hit the trend line on Friday, acted as support, didn't quite break it, or at least didn't stay below it. So this is another one where I'll be eagerly looking at the market open. It did open an hour or so ago, but I'll be looking at what it does tonight into tomorrow, Monday, to see whether we have anything to trade. USD CAD, very sideways, very non-committal. We're also here waiting for a break in either direction. USD Swiss broke support finally, and then Thursday into Friday went back up towards the new resistance, old support, new resistance. And it does have room to go in either direction. So one worth watching, especially now that it broke out of the wedge, but it's still doing a test. Aussie dollar still playing at the top of the chart without breaking above, but also without breaking below. So, hey, what does that mean? It means it's sideways. So we're waiting for a break in either direction. Kiwi dollar trying to break out towards the top. It was in a sideways pattern. It might be ending. It did break out Thursday and Friday, but couldn't manage to stay above it. And you'll notice I cleaned up the charts finally, guys, and I apologize for it taking so long. But as you add all these trend lines and supports and resistance and all that, the charts tend to get a little bit busy, and that's not good. I cleaned out all the older annotations and left only the ones that I think are still valid. So you'll see that the charts look a lot cleaner this time around. But anyway, Kiwi dollar is trying, or tried to do a breakout last week, didn't quite manage it. And again, we'll have to pay attention to it as the week begins to see if we have an opportunity. Aussie Canadian also at the very top. That resistance is very strong. It's been holding quite nicely, which is good because we've got a short on the long-term account. But also we have a long on the intermediate. So either way it goes, one of the accounts is going to win. And the other one, unfortunately, is going to lose. If all things work out, then the winner will be bigger than the loser, and we move on. But anyway, my preference here is for a drop. I think it's spent. It's not going to go up a lot more, so we'll see what happens. Euro Swiss tested support and bounced off of it on Friday quite dramatically, actually. Still has room to go towards the bottom. Still looks very bearish, but nothing I would like to get into until it does break out of that sideways channel. That you can see it's the one it's currently inside of. It's got many channels, but the one is currently inside. Euro pound, we traded the break on the intermediate term account, and as we saw, this is one of those that actually moved a bit for the month, and we can see that clearly on the chart. Finally managed to break that trend line, and we'll see if it does a Kumo cross, which would just cover us in dollars. So that would be nice. Euro JPY tried to break support, took us into a trade on the intermediate, and bounced right back. So we are carrying a loss on the Euro JPY. I think it's our deepest loser as we kick off the week. And again, well, we'll have to wait and see if it does a repeat of that test and keeps going. Otherwise, well. Euro CAD, very sideways, a bit of a wider range, about a 400 pip channel, very close to the top. I wouldn't mind going short on the Euro CAD, but I want to see it break that trend line first. Or I want to see it pop up towards the top and sell at the top, either or. Pound JPY is following a trend line up, tried to do a test on Friday, failed, and pop back up to a prior resistance. We'll have to see again what it does as the week ends. It's in a wedge, but it's at the very bottom. Aussie JPY broke that trend line quite a while back, tested some of the upper levels of resistance, and seems to be turning around. May give us an opportunity to trade it down. Too soon to tell, but it's there. So I'd be keeping a close eye on the Aussie JPY. Euro New Zealand, it was the perfect textbook example of flat for the entire week. Just kept crawling along that support line. Finally broke on Thursday and then came back right up to it on Friday. Pound Canadian is breaking out towards the top of the wedge, and it's doing a Kumo cross. So this may be one that we trade up if we see this movement continuing. Too soon to tell. Tomorrow into Tuesday, I'll make a decision on whether we want to be in this trade. Pound Swiss is following a trend line, and we're waiting for that to actually, we're trading it up. We are in a long on the Pound Swiss as it follows that trend line up, and it is carrying profits. We'll have to see how that ends up beating us. And that's the end of our chart. Setups we see in progress, no change. Coronavirus is still the main factor. I'd say it's 80% of the factors out there are coronavirus. Some of the other economies, like the U.S., have other stuff going on, the general economy for one, which is, I'm going to say we're in a recession. We've just refused to admit we're in one. And at some point, there'll be a price to pay for that, which will affect both the stock market and the U.S. dollar. But for now, we're pretending it's not happening. Riots still going on, but not as heavily as before. And of course, we're getting perilously near the next election, November. With all this stuff happening in the background, it promises to be a roller coaster of an election. I'm not going to do any predictions simply because I don't predict. I have some preferences there, but I'm not going to mix politics into what we do. Suffice it to say that this election is going to be a very interesting one. Australia, we have a positive outlook to some degree in Australia. It seems to have weathered the whole coronavirus thing better than other economies, but, and this is a big but, there have been news coming out of Australia that they are shutting down wide regions yet again because of rising COVID numbers. So they may have jumped the gun and opened up a little bit prematurely. And some of the analysts are saying that they're going to take at least a 5, maybe even a 10% hit in their economy in the short term as a result of COVID. To which I would say, well, who isn't? Everybody's going to be taking a hit. So, but what really matters is the perception of the market towards Australia. I think they have a positive outlook, but the market may be expecting more than Australia can give and will punish them as well. So keep a close eye on the Australian pairs. There'll likely be very good opportunities in either direction once it gets shut. Japan, lack of confidence for reasons completely unknown to me, because they have weathered the coronavirus much better than anyone, much better even than Australia. They have the lowest death count by numbers, by percent, any metric you choose. Japan is doing pretty well, yet the yen is being punished. Go figure. And the euro, of course, is still shining on the backs of that stimulus bill they passed about a month ago. We'll have to see what the interest rate decision this week is going to be. If they keep the interest rate unchanged or drop it maybe into slightly negative territory, that would give us a firmer idea of what to expect. For now, I think there's confidence in the euro, but it's a very cautious confidence, and that could change at any point. That is the end of my presentation. A few words in conclusion here. And again, I usually pick these out of whatever emails or conversations I've had. And in particular, somebody asked me, well, trading seems to be dangerous. You're down whatever percent right now. I said, yeah, I'm down, but I'm down because of my style of trading more than anything else. I had a very high-paying job. At this point, it doesn't matter if I state the number. There are no non-disclosure agreements or confidentiality clauses that apply to me anymore. They've lapsed. But I was making close to $200,000 year, just 4 to 5 years ago. But I never bought into that idea that I had to work 8+ hours a day just to get by. And trust me, with that 200,000 a year, I was just getting by because half of that was gone before I even saw it. Between taxes and Social Security and this, that, and the other, I barely got to keep like half of that. I was taxed very heavily. I had a lot of cost involved in doing my job because I had a very long commute. My commute at one point was more than 4 hours. I would commute from Pennsylvania to Washington, D.C. Now, I only did it once a week. I would drive down on Monday and come back on Friday, but you know what that means. I had to get a hotel, and that came out of my pocket. So I had a certain amount of cost, plus wear and tear both to myself and my vehicle, I guess, in order to get that high-paying job. It didn't come free. I could have moved to DC or Virginia or whatever to be closer to the job, but I like it where I am. I don't see why I should move from where I like. So anyway, I never thought that was going to be my job till I dropped dead or retired at 70 or whatever people do these days. So I just didn't buy into that. So nowadays I trade maybe an hour a day, and I pursue many other interests the rest of the time. Some of them because I enjoy them, some because they make me money. I buy houses and rent them out, for example, which I don't really get into here in Special Effects Academy, but that's another chunk of income my way with very little work. It's my money working, not me working. Or I just enjoy doing nothing. Heck, I just laze around or binge watch Breaking Bad or whatever. Simply because I can. I don't have to get up at any time. I can stay up till all hours of the night, waiting for the London Open, at which point I review a few trades, maybe place a trade, and I'm done. And then I get up late in the morning and start it all over again. I feel no need to look busy. And in fact, I pride myself on doing the least amount of work possible and still living better than my former colleagues who are still bringing in the six-figure salaries. And these are people who we planned and connived with when I was in the job, 5 years ago or whenever. And we would say, no, we got to get out of this. We got to do something else. We can't be grinding ourselves away to make money for somebody else. So we got to make money for us. I'm one of the few that actually did it. All the others are still hanging on to their $200,000 a year jobs, barely taking $100,000 home and not even getting to keep that because most of it they spend in order to keep the job. But that's me. That was my approach. I can lead the horse to water. I can't make it drink. So you can treat trading as a job and do it 8 hours a day. And trust me, you would be making money right now where I'm not. That's simply not the way I trade. But I could be making a very small amount every day, and that would turn into a bigger amount over a year. And I'd be making about as much money as I do now, but I'd have to put 8 hours or more a day into it, and I refuse to do that. I'll put an hour a day, and yeah, sometimes I might be down 20, 30%. It happens. I've never hidden that fact. But then at some point, I'll make it back and go to even higher. And it still only takes me an hour a day. That's the key takeaway from what I'm saying, is that the way I do it, it takes me an hour a day. If you want to do it 8 hours a day, there's nothing wrong with that. More power to you. But you have to understand that that's what you're doing. I did not like the idea of trading a time-sucking job for another time-sucking job. What I wanted was to make money with the least amount of effort and enjoy my life, and I managed it. So you guys have to make a choice what kind of trader you are and what kind of life you're looking for, and act accordingly. There's no wrong or right way of doing it. My way is right for me. Your way is right for you, and your way might be trading 10 hours a day. Who knows? There are people who enjoy that. I'm not one of them. And you might very likely do better at it than I do it if you do it 8+ hours a day, because some of you are just as smart or smarter than I am. But I have enough. I'm okay making my returns and making the money I make. Indeed, I think it's more than enough. And I'm not going to put in more than an hour a day into doing it. So that's that. That's my little bit of rambling words of wisdom for the week. And that's going to be it for me this session. I wish you a rest of a great weekend, however few hours are left of it. And I'll talk to you guys next week. Any comments or questions from anyone? Okay, thank you very much. And I'll see you guys tomorrow, 8 p.m. Have a good one.